If I have to pick one stock that truly defines the roller coaster journey of share price movement, then Tata Motor would be on top of that list. It has been a massive wealth creator in the last few years, where its stock price zoomed 18 times from COVID lows of 65 rupee, and from there it is down more than 40% today. Mind you, Tata Motor is a large cap company and 40% correction in large cap company is not very common. But the interesting part is, it's not the first time Tata Motor has corrected such sharply. In fact, the stock tanked nearly 90% between February 15 till April 20. Imagine how difficult it would have been for Tata Motor investors when stock kept on falling for 5 years, wiping out around 90% wealth from the top. Before that, Tata Motor zoomed nearly 20 times between 2009 to 15. But before that, it again tanked more than 80% during the housing bubble bust. Hey everyone, my name is Sahil and this is my Personal Finance Academy. Tata Motor share price has tanked more than 40% from the peak, and in last 1 year, its stock price is down around 25%. Interestingly, in last 1 year, the total number of shareholders for the company has zoomed from 41.8 lakh to 64.6 lakh. So nearly 13 lakh people invested in Tata Motor in last 1 year when its share price kept falling. By the way, Tata Motor has the highest number of individual shareholders, followed with Yes Bank, Tata Steel, Vodafone Idea and IRFC. The big question here is, why has Tata Motor fallen more than 40%? Another important question is, Tata Motor has a history of correcting 80-90% in the past, so can it repeat the history, or has the stock bottomed out? So I have divided this video in 4 segments. First, I'll discuss Tata Motor business model. Second, the reason behind 90% correction between 2015 to 20. Then third, why it jumped 18 times from 2020 to 24 period. And finally, why Tata Motor stock price is down 40%, and is there more correction ahead or worse is over? Before we proceed, let me tell you that I am personally invested in the company, although my buying is at lower levels, so I am still in profit. But after this sharp correction, I went back and studied the entire development to understand the reason behind the correction and way forward. So this video is to share my knowledge with you all. Before taking any investment decision, I would suggest doing a thorough analysis yourself. Alright, let's get started. So Tata Motor has a huge business that is broadly divided into 4 categories. First is Tata Commercial Vehicle. Tata Motor is India's largest commercial vehicle manufacturer that offer many products including trucks, buses, commercial vehicles and so on. Second category is Tata Passenger Vehicle that include both electric vehicle and non-electric vehicle car. Tata Motor is number 3rd in terms of overall passenger car industry in India that include cars across categories like hatchback, sedan, SUV, and it's number 1 player in Indian EV passenger car with brands like Punch, Nexon, Tiago and so on. Then third category is Jaguar Land Rover. So Jaguar Land Rover is a British brand that Tata Motor acquired long back in 2008 for $2.3 billion. It basically caters to the luxury segment with 4 brands: Range Rover, Defender, Discovery and Jaguar. And fourth category is vehicle financing business, where Tata Motor operates as NBFC to provide your financing related solution. Company has its presence all over the world. This is the data from FY24 annual report, where Tata Motor cars are sold in more than 125 countries. It has 25 manufacturing sites, 9 R&D centers and more than 9,400 touch points. India is the highest contributor in company's business in terms of geography with 1.27 lakh crore, followed with North America contributing 67,000 crore, China contributing around 57,000 crore, Europe with 55,000 crore contribution and UK with another 55,000 crore contribution. In terms of percentage, 35% revenue comes from India, 18% from North America, around 15% each from China, Europe and UK. In terms of revenue breakup by business division, in FY24, company did a total revenue of around 4.38 lakh crore. Out of this, commercial vehicle contributed around 78,800 crore, which is around 18% contribution in revenue. Then passenger vehicle contributed another 52,400 crore, which is around 12% contribution, and Jaguar Land Rover contributed nearly 3 lakh crore, which is around 68.5% of total revenue, and remaining includes other business like NBFC. So here the important takeaway is Jaguar Land Rover has the highest contribution in Tata Motor business. Now let us try to understand the reason behind 90% fall in company share price between 2015 to 20. That would give a good idea behind what went wrong that time. So there were multiple factors that resulted in sharp fall in Tata Motor share price between 2015 to 20. First biggest factor was trouble with Jaguar Land Rover business. During 2015 to 16, Jaguar Land Rover contributed around 75 to 80% in Tata Motor revenue, and it struggled badly due to weak demand from China and Europe that are key market for Jaguar Land Rover. This was due to factors like increasing competition, changing consumer preference and Brexit related uncertainties. Jaguar Land Rover also struggled with quality issues that affected its brand image and customer satisfaction. This led to increased warranty cost and negative sentiments among consumers that negatively impacted Jaguar Land Rover profitability. On top of this, 2015 to 20 witnessed a shift from diesel vehicle in Europe, and that was a major part of Jaguar Land Rover business. Then second factor was slowdown in Indian auto industry. 2015 to 20 was the phase when Indian auto industry witnessed slowdown. There was demonetization followed with ILFS crisis, Yes Bank crisis that resulted in liquidity crunch for NBFC sector. So overall sentiment and economic growth was on slower side that impacted both passenger and commercial vehicle sales in India. Plus, Tata Motor faced stiff competition from players like Maruti and Hyundai. Then another reason was transition in emission norms from BS4 to BS6. Due to that, the demand for BS4 vehicle reduced significantly. And then of course, COVID impacted the world that further resulted in slowdown in auto sales in 2020. As a result, Tata Motor revenues remained almost flat between 2015 to 20. Unfortunately, 2015 to 20 was also the phase when raw material prices increased a lot, and that put a lot of pressure on Tata Motors' margin. On top of that, Tata Motor was investing significantly in future car technologies around your connected, safe and electric cars. As a result, company's margin tanked badly from peak of 15% to lows of 7%. And that hit company's operating profit that went down from peak of 39,000 crore to 17,000 crore. That's more than 50% decline. On top of this, Tata Motor had a massive borrowing of 73,000 crore in 2015 that kept on increasing till 2020 due to significant capex. Due to all these factors, company's net profit tanked significantly from 14,000 crore all the way to losses. But then, company witnessed a turnaround with profit jumping significantly, and that resulted in extraordinary growth between 2020 to 24. Let's understand this turnaround period. So post-COVID, three factors resulted in extraordinary growth of Tata Motors. First factor was strong rebound in Jaguar Land Rover performance. Jaguar Land Rover witnessed a resurgence in demand, particularly from its newer models like Range Rover and Defender. This was driven by a combination of factors including pent-up demand after the pandemic, successful new product launches, and a rebound in key markets like China. Jaguar Land Rover also implemented cost-cutting measures to improve profitability that further helped boost its financial performance. Plus, Jaguar Land Rover strategically focused on selling higher margin models, which contributed to increased revenue and profitability. Then second factor was resurgence in domestic business. Tata Motor launched a series of successful new passenger vehicles like Nexon, Punch, Harrier, which gained popularity in the Indian market. It helped Tata Motor gain market share in Indian passenger vehicle segment. Also post-COVID, EV segment witnessed a strong growth and Tata became pioneer in Indian EV market with its Nexon EV becoming the best-selling electric car in the country. This early mover advantage gave Tata Motor a significant edge in this rapidly growing segment. Also, Tata Motor commercial vehicle segment witnessed a strong growth due to growth in economy after pandemic. Company also took measures to reduce its debt burden and improve operational efficiency in its domestic business that helped reduce cost and improve profitability. And third factor was positive market sentiment. Post-COVID, Tata Motor revenue zoomed significantly from 2.5 lakh crore to 2.78, then 3.45 and then 4.37 lakh crore. Not only that, company's margins expanded from lows of 7% during COVID to 14%. And company's net profit became positive in 23 after 4 years, and then it zoomed to more than 30,000 crore. Company's cash flow from operation grew exponentially from 14,000 crore to 35,000 crore and then 67,000 crore. Now during COVID, when Tata Motor share price touched lows of around 65, since its earnings were negative, we could not calculate the PE ratio. But during that time, Tata Motor was doing annual sales of around 2.5 lakh crore rupees. And against that, its market cap touched lows of 24,000 crore. Just imagine a company doing sale of 2.5 lakh crore and commanding a market cap of just rupees 24,000 crore. Now that is justified when the business is going downhill. Obviously nobody wants to touch it. But when the business turn around, that creates extraordinary opportunities. So during that time, Tata Motor market cap to sale touched lows of 0.1. And then the entire Indian auto sector witnessed excellent recovery along with a massive bull rally in the market. Hence, Tata Motor share price zoomed around 18 times from the lows of 65. I hope you got a fair idea behind the rise of Tata Motor's share price. Here I would like to highlight the role of Mr. N. Chandra, who was the CEO of TCS and then became the chairman of Tata Group in 2017. His strategic vision and direction was instrumental in the turnaround story of Tata Motors that included focus on innovation in electric vehicle segment, technology upgrade across the company, new product launches, and cost optimization. By the way, company's shareholding pattern is also very interesting. During the bad phase, both FIs and DIs were selling the stock and public holding was increasing. But when the business turned around, both FIs and DIs started adding it and public started selling. All the promoters had massive confidence in the company and they kept buying shares between 2017 till 21. However, between March 24 to December 24, promoters have reduced their stake from the company. FIs are slightly reduced stake, DI's stake is slightly up, and public holding has increased from 18% to 21.9%. Now let us understand the reason behind 40% correction in Tata Motor and way forward. After an amazing growth journey post-COVID, Tata Motor is again facing headwinds. First big challenge is Jaguar Land Rover performance issue. Jaguar Land Rover has reported sluggish sales in the Chinese market, which is a significant contributor to its revenue. This slide shows the latest data as of Q3, where premium car market of China is down 14% versus last year and ICE market is down 16%. As a result, Jaguar Land Rover import is down by 6% and local sales are down 27% year on year. By the way, China contribution is around 15% in FY24 revenue. Also, the rising inflation in Europe has impacted consumer sentiments. Jaguar Land Rover also faced challenge with high warranty cost. As a result, Jaguar Land Rover Q3 net profits have fallen by 17%. This downturn has raised concern about Jaguar Land Rover growth prospects and profitability. On top of this, the global auto sector is also facing an unpredictable market environment that include tariffs, rising emission costs, and disconnect between consumer demand for EV and government emission regulations. Then second factor is domestic market challenges. Tata Motor commercial vehicle segment has witnessed a 13.9% year-on-year decline in wholesale volume during Q2 and in Q3 it is down by 8.4%. Some key factors include delayed infrastructure projects, decreased mining activities and adverse weather condition. Also, the growth in passenger and EV segment has been slower than anticipated with increased competition and market saturation affecting sales. Tata Motors certainly took the lead in EV car in India, but now other companies have also launched great EV cars in Indian market. So competition would be a key risk. In the latest quarter, company's passenger vehicle sales have fallen by 4.3% year on year and even EV segment growth is just 5.8%. Overall, Tata Motor Q3 results were quite weak with 27% decline in the profits. And that impacted investor sentiments that resulted in profit booking. Valuation wise, after this correction, Tata Motor market cap to sale is around 0.6 and P ratio is around 8. Again, we can't really compare it with Mahindra and Mahindra or Maruti that commands a much higher P ratio because they both generate maximum business from Indian market, which is a fast growing economy, whereas Tata Motor generate around 35% business from India. The final question now is, what can be the expectation from Tata Motors? Will it continue to fall further or has it bottomed out? So first of all, share price movement is totally dependent upon earning growth and valuation. Further, earning growth is dependent upon the demand for Tata Motor vehicle across all the geographies it operates. Now there are few things that are not in the control of company. For instance, if Chinese demand is slowing down and entire auto sector is struggling, Tata Motor would also struggle. And even Tata Motor management would not know when exactly the situation would improve in the near term. In the latest con call, they clearly said that we need some time to work out whether what's going on in China is cyclical and it will rebound, whether it will not rebound or whether it will go further down from here. On top of this, competition is something that is again not in control of Tata Motor. That's where in the near term, whether Tata Motor would fall further or whether it would bottom out at current level would only depend upon company's Q4 performance, which in turn would depend upon demand scenario across India, China, Europe and US. Plus competition would also be an important factor to watch out for. So we need to keep a close eye on quarterly results. In fact, this is applicable for every company. If you are an individual stock investor, you must track the quarterly results because that gives the idea on what is happening in the company and reason behind why share is going up or down. Obviously, it's a very time-consuming task and not possible for someone who has a job or business. That's where I try to add value via my weekly video series where I track more than 200 quarterly results and document it in an Excel tracker. Plus, I also share my own investment strategies. For more details, you can explore my website or join button on this YouTube channel. Moving on, in spite of all these challenges, I don't think Tata Motor would see a sharp correction of 80-90% like previous cycles. Under the leadership of N. Chandra, Tata Motor has come a long way. Today, this company is generating cash flow of 67,000 crore and company is leading the EV car industry in India with many bestsellers. In fact, Tata Motor Punch has become India's most selling car and has broken Maruti record of 40 years. Not only that, company is investing significantly in building the car future technologies, launching multiple new products including EV version of Harrier, Tata Sierra, Tata Avinya. Then Jaguar is now repositioned as a luxury car and entering into a new era of only electric versions. In the next few years, Tata Motor is going to launch multiple EV models across 4 brands of Jaguar Land Rover. Tata Motor is also working towards increasing EV adoption in the country with plan to more than double its EV charging station to 4 lakh by 2027. Plus, company is doing backward integration by investing $1.5 billion in a battery gigafactory that is planned to commence operation in 2026. This facility aims to reduce dependence on external supplier and enhance competitiveness in the growing EV market. As far as near term is concerned, Tata Motor is taking steps to mitigate the challenges where one key initiative is controlling the inventory levels. Management mentioned that going forward in Q4, a key focus is going to remain in terms of driving growth by capitalizing on low channel inventories and healthier dealer network. I hope you got a fair idea of current challenges and Tata Motor plans to mitigate them. Like I said, not everything is in company's control, but management is doing everything they can control. Overall, I have a strong trust on company's management. I believe that EV is the future of 21st century and Tata Motor is one of the leading players in this segment. As far as growth is concerned, India is definitely a fast-growing economy as compared to countries like Europe, US and China. But since Tata Motor generates around 35% business from India and rest comes from other geography that are relatively slow growth economies, it won't command a valuation like Maruti or Mahindra & Mahindra that are mainly focused on Indian market. Having said this, today Tata Motor is trading at a PE of 8 and market cap to sale of 0.6 as compared to 10-year median market cap to sale of 0.5. So valuations are not expensive. From here, in the near term, everything would boil down to quarterly performance. That said, I am quite confident in Tata Motors' long-term story. This correction should not create panic. It may continue to test patience if the weakness persists in the coming quarters. But in the long run, Tata Motor should reward the investors. By the way, Tata Motor has also announced the demerger of its passenger and commercial vehicle business that is planned in July 25. Let me not stress this video further. I have tried to share all the information I have gathered over the last few days of my research in this 15 to 20 minute video. I hope you'll appreciate my effort. If you find this video useful, do share it within your circle. I'll see you next video. Till then, take care.